Alright, welcome back to MMG. In today's video, I am going to talk about the news. So, first of all, I've changed the WolfPackCryptos YouTube channel to MMGinvest, as you can see here. So, going forward, it's going to look different, and it's going to be called MMGinvest. This will eventually change the logo. You still have the wolf in there, and you have a lion staring at it. I think it looks cool. I get creative, guys, real creative. And I just want to give you guys a heads up on that. And also go to my other channel. It's also called MMGinvest with the gold line, and subscribe there, please. I really need this to get to 1,000. I don't know why people won't do it. It's not that hard. I would really appreciate it. Alright. There's a lot going on as usual. This summer has been the wildest summer in my lifetime I've ever seen for markets. I mean, besides like 2008 and all that, but I was young back then. I wasn't exactly as active. I was just watching. So, first of all, this isn't financial advice. Consult your financial advisor. I'm not your financial advisor. Cryptos, stocks, everything. It's extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. Have stops in place. Emotions out. This is more of an educational channel. Listening to me rant, cover some news, talk about macro trends, and learning how to chart and trade. In this video, I'm not gonna do too much charting. I'm just gonna talk about what's going on and give you guys, I don't know, my opinion and my thoughts. Alright, so I'm gonna start off with Bitcoin and some crypto news first. Also, I've changed a lot of things, like the names and the logos. So the links are different. The links are below this video for the newsroom and all that if you haven't joined. So, New York Supreme Court denies Bitfinex's lack of jurisdiction claim. That pretty much means, what I'm thinking it means is they're not out of the jurisdiction of the New York AG. And, you know, there's international task forces and whatnot. They're going to go after him eventually. So nothing's changed there. That's not surprising. It did help the price dump for Bitcoin. So Trump is talking about all kinds of things to get the markets to go back up. Again, it's like whenever the market drops, all of a sudden the trade deals are back on. It's going to be great, you know, blah blah blah. I don't think the market's buying it anymore. I mean, they shouldn't. He's been doing this for like over a year now, but somehow the market pops every time the news says, "Oh, we're coming to another trade deal," whatever. In the end, I mean, there will be no good trade deal with China. I mean, maybe, I don't know. Whatever. He's also talking about more tax cuts, and he was actually floating the idea of a capital gains tax cut, which would be awesome. It'd be great, especially for gold, silver, mining stocks, right? Because if we expect massive gains in the next 2 to 3 years, I mean, if he lowers the capital gains tax on that, it means a world of difference. You guys need to understand that taxes, they make a huge difference, especially year over year compounded. So, you know, if you made a 10% gain year over year compounded, within a decade you could be a millionaire. But you know, if they take 20%, it's the different. You have to subtract the 20% compounded, which would mean that you're not going to be a millionaire. So I have to show you guys a chart on that. It'll blow your mind how much taxes destroy your wealth compounded year over year. So U.S. Secretary of State wants to regulate Bitcoin like other e-transactions. I mean, that's horrible for cryptocurrencies and Bitcoin. Of course, everyone in crypto land is going to ignore this, like they ignore everything else that's negative. But, you know, like I said, guys, they're going after him. Well, they're trying to control the entire crypto space because they don't want capital flight and all that. And they want to tax it more. A guy makes $20 a month from locking in 5 million Bitcoin on the Lightning Network. That's hilarious. You guys could read that article. I'm not really going to talk about it. But, you know, Trump says that. Trump says he can issue capital gains tax cut with executive order. Now, he's saying that to make the markets rally. If he ever actually does do it, it's actually very bad for the markets for the long term, because if the economy and the global economy and everything's going to go into massive recession and depression, when the left takes control of the government again, right? They're going to blame tax cuts and free markets and all that. And it's just going to help them bring in like hardcore communism. But for the short term, it would be great. It'd be great for us for the short term. And then maybe you'd want to grab your bug out bag and just leave. Yeah. Not keeps me up at night. President Trump, nothing keeps me up at night. I'll tell you, we could wipe out anything. I'll show you guys this video towards the end. Yeah, this is hilarious, especially what I wrote. I'm not going to cover it on video. Tether rolls out yuan-backed stablecoin. So this is Chinese. Or no, Japanese. Tether is yet to launch its previously announced stablecoin that is backed by the Japanese yen. I don't know, guys. It's like just more excuses to make more Tether, in my opinion. There's essentially no volume in yen or yuan trading volume or funds going in and out of crypto right now. All right, so let's cover some stock and economic news now. So after the yield curve inverts, here's how the stock market tends to perform since 1978. So, you know, mainstream media right now, financial MSM, they're literally saying, you know, it's going to be okay, guys. When the yield curve inverts, and it inverted again today for the second time, but this is what their narrative is right now. It's okay because we have like 10 months, maybe a year and a half. So keep buying stocks. I shit you not. That's what they're saying. I knew they would say something stupid like that. But you know, markets are forward looking. So, you know, if everyone expects the market to drop 10 months from now, wouldn't you want to be early to get out? So maybe you'd get out now just to be really safe. Or, you know, that's how smart money thinks. Anyways. So, on average, the S&P 500 has returned 2.5% after a yield curve inversion in the 3 months after the episode, while it has gained 4.8% in the following 6 months, and then you get a huge, you know, 60% drop. So this is like the stuff their, you know, articles are pumping out there. It's okay. The market could go up another like 5%. So you want to stay in, guys, till the end. Try to time the top, right? Anyways, I just want to touch base on like pretty much the narrative right now. So I'm going to read this article. It's really good. Let's see what else I have here before I do that. All right, so let's just go through some of the stuff on Zero Hedge here. So, trader, getting rich off the greater fool has worked wonderfully until today. That was the recent drops in the past week or so. Apple aggressively testing new Flex smartphone screens made by Chinese firm. So, I've said this numerous times. Apple, it's Samsung, in my opinion, tech-wise, it's better. They have a Flex folding phone now. I'm going to get that. Although, I don't know. I don't want it to fry my nuts. And I don't want 5G. I don't need it. I mean, who cares about lightning speed? I just want, I don't want to get radiated with. Anyways, Molden modern monetary theory could destroy this nation. Oh, modern monetary theory, MMT, guys. I've talked about MMT before. MMT is essentially like pretty much Venezuelan style printing of money, Zimbabwe, It's just they slapped a new term on it, new name, so people accept it. And if the left takes control of the government in the U.S., which can happen in 2020, I don't know if the market will survive till then. But it'll definitely be 5 years from now, after 2024, right? They'll definitely try to do that if everything hasn't fallen completely apart. And at that point, zoo animals will be on the dinner plate. What else is going on? War drums, U.S. Navy ready for Venezuela conflict, says top commander. Venezuela's got a lot of that oil. Kyle Bass summarizes the state of the world. This is insane. Right. Every central bank around the world is literally at negative yields, are about to queue up QE in the printing presses again, which is honestly, it's a telltale sign. If it's not, it's all the evidence I really need to say the fact that the world economy is a Ponzi scheme. If all central banks in the entire world have to lower interest rates and print money, that tells you that the entire global economy and financial system is a Ponzi scheme. It's like a Bernie Madoff style, and our BitConnect. And that's all, in the giant macro sense. It's what it is. And it's pretty obvious at this point. You could blame it on the dollar, that it's the world reserve currency. You could blame it on the 2008 mortgage-backed security crisis. But honestly, I just blame it on central banks and governments. Everyone's just I blame it on the boomers, because they're the ones running the show. And they're self-entitled, the worst generation. And they're all living beyond their means, and they're trying to keep the music playing globally at this point. Every region, from Europe to Asia to the US, emerging markets as well, they've all taken on too much debt. What that means is people aren't working and producing efficiently things and services versus the actual amount of money and debt floating around the system. So this is how I look at it from a huge macro perspective. Everyone just borrowed a shit ton of money, didn't really work hard, and can't pay it back. And the day of reckoning is like pretty much here. And I don't know, the world's never seen anything quite like this. So the boomers. Okay, FOMC minutes show most Fed officials, because the statements came out, or the report. FOMC minutes show most Fed officials saw rate cut as mid-cycle adjustments. So if this is true, right, So Powell and the other Fed chairman there, the rate cut that we just had, they just see that as a temporary little thing to give the markets a little boost because global there's a little bit of a global slowdown, and then they're going to go back to raising rates, which is complete nonsense and bullshit because everything runs in trends. If there's a global slowdown, it's probably going to last decades. you know Once in motion, it tends to stay in motion for quite some time, especially a global economy. So why would they think that? Why would the markets even think that? I don't know, guys. People are drinking too much tap water, right? To me, everything is the writing's on the wall. All right, they're not only gonna cut rates next time, but they're gonna cut them by a lot. And Trump is like tweeting crazy tweets. I'll show you guys the tweets in a second. It's hilarious. And Trump's just crying to the Fed, you guys need to lower rates by a lot. And it also, Trump's also doing that so he could shift blame on the Fed when the markets, really, really sell off and the economy falls into a recession, if it's not already in one right now. All right, stocks shrug off Fed's mid-cycle language, bond yields, and dollar dive. So that's the next article. Yeah, the market sort of popped. I'll look at the charts for a second once I'm done talking about the news. Fed minutes hint at coming QE coming. So yeah, I've been saying that this is how everything's gonna happen. The QE is gonna come, guys. When quantitative easing is literally being talked about in mainstream media, and after the Fed cuts rates to who knows, they'll probably start talking about QE before they even go to zero. Maybe they'll try to go to negative yields, then QE. Either way, gold and silver is going to... You know what? At any time is a good time to buy it at this point. Waiting for a pullback is kind of risky because a pullback in gold and silver may never come. And things are really accelerating, especially as earnings come out for all these major corporations for the fourth quarter of 2019. That'll come out in the beginning of 2020. But, if third quarter earnings come out towards the end of this year, and those are already weak, the market's going to fall, they're going to lower rates, and then they're going to do QE, and metals and mining stocks, some of them have gone up. Most of them haven't gone up tremendously compared to the price of the underlying physical metals. So what I'm saying is the big moves in the mining stocks, we haven't really seen them yet. So it's not too late. Some people think it's too late. No, man. I mean, it's still early. I'm still buying. Today I was gonna buy some more, but I missed it. I didn't. I want to do a little more research tonight. All right. So what else? Based on what people are searching on Google Trends. So check this out. This is since 2004 searches. So this was back in 2007, 2008. The Google search trend for recession. And this is the United States. Check out what's estimated here. So the public, the retail investors, mom and pop, and cab drivers, and shoe shine boys, not that they really exist, but your your barber, the boomers, they're getting a little worried. They're starting to search for recession on Google. Here's the chart. Look at this huge spike. As soon as the yield curve inverted and the market took a shit a few weeks back, right? So public sentiment, it's not so FOMO bullish anymore. They're getting a little worried now. And if once we fall into a recession, it's not going to be said on mainstream media until we're in the midst of it. So a few months prior to everyone admitting and the Fed admitting that we really are in a recession, people are going to start losing their jobs. And what do? They have to sell stocks and stuff. So, yeah. What else? Tesla's competition is crushing. I'll talk about Tesla in the private group. So, belated rate cuts have always been associated with recession. Fed is 10 months behind. So, the Fed is stuck, right? And it's like, it could be 10 months behind the curve. So, I posted this in the private group. Where is it? And if we look at this chart, I know it doesn't blow up completely. It's hard to see. But whenever the Fed reverses policy abruptly, like the Fed just realized it's popping its own bubble, essentially. And this isn't the first time it's doing it. It's done this in the past as well with Greenspan and Bernanke and all of them. So the Fed, what it does is it starts normalizing rates, and that's what causes the business cycle. But as they normalize rates or try to, the stock market starts selling off, and we start going into recession. And it always happens as the Fed abruptly stops raising rates and starts reversing and starts cutting rates to try to stop a recession from happening. But they can't stop it ever. And it usually gives you about a 10-month lag. But the Fed is like 10 months behind the curve. I don't know. This time it is a little different in my opinion. This time the bubble's so big that not only are not only could they not like get to 3% interest federal funds rate, right? But now they're gonna lower to 0 real quick and then do QE before mainstream media even says that we're in a recession, and they're gonna try to do that. And I think Trump, that's what Trump wants. That's why Trump keeps putting the pressure on the Fed so he could get reelected. Our research showed that the Fed achieved soft landings as in 1995-96 when it started rate cut cycles. The same month the inflation downturn signals from the blah 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 arrived. However, recessions followed when the rate cut cycles began with lags relative to the downturn signals. Yeah, I pretty much covered that. All right. So what else? All right. Here's Trump's latest tweet. Doing great with China and the other trade deals. The only problem we have is Jay Powell and the Fed. He's like a golfer who can't putt. Has no touch. Big U.S. growth if he does the right thing. Big cut. But don't count on him. So far he has called it wrong and only let us down. Trump's hilarious. I don't care how much you like him or hate him. He's funny. We are competing with many countries that have a far lower interest rate. And we should be lower than them yesterday. Highest dollar in U.S. history, no inflation. Wake up, Federal Reserve. Such growth potential, almost like never before. I mean, it kind of blows my mind he's saying this. Because during, the elections, 2016, he said that the Fed blew a giant bubble with low interest rates. But, behind the scenes, what that does tell me is that he's not stupid. And he knows by forcing the Fed to create an even bigger bubble, he knows what's going on. So what that leads me to believe is he has some sort of plan. He has a plan. Believe me, they have some sort of plan. Or his game plan is to keep calling out the Fed, and then when shit hits the fan, he could blame the Fed instead of the economy and the recession being blamed on him. I hope that's not the only plan and the only trump card he has. Because if that's the only trump card he has, This could end really, I mean, it's going to end really badly for the US no matter what, but it's just going to usher in like hardcore commie and MMT, modern monetary theory policies. And that's no joke, going to be a disaster for American people. JP Morgan spoofer pleads guilty to gold manipulation, faces 11 years. No surprise there. Alright. So let's get back to some the articles here. I will post this. Kyle Bass summarizes the state of the world. It's pretty... someone actually laid some truth on MSNBC there. I'll post this in the free group of MMG and the newsroom. Alright, so let's show you guys what he said here.
On China, there is a new study out of Australia that suggests with the current Chinese military posture in the South China Sea, Indo-Pacific region, it could wipe out most U.S. bases within a number of hours. Is that something that keeps you up at night?
Well, nothing keeps me up at night. I'll tell you, we could wipe out anything we want. We have the most powerful in the world, and when I came...
Alright, that's pretty much it. But, the only reason I'm covering this is because, I've talked about how China is the upcoming superpower in the world, right? Especially with the One Belt, One Road, trade route going through, you know, Russia, India, Middle East, into Europe, all the way down into Africa. And, you know, they've built like military bases across the Pacific. That's just another telltale sign of the power shifting from the West to the East. And, you know, they asked Trump that, and, you know, his response is to show no weakness. He's like, we could wipe anything out. But, yeah. So, Germany stalls and Europe craters. Pretty much the European EU nations, all of them in their financial and banking sector, is in some serious trouble. I will also post this article, as I already did, I think, in the free groups and in the newsroom. Alright, so let me read this one article real quick, because this was pretty good, and I liked it, the way it was worded. If I could find it. And then I'll leave it there. Then I'll look at charts for a second. Here's the article. How negative interest rates screw up the economy. This is really important to understand. It's also by Wolf Richter, August 21, 2019, on the Wall Street article. It's a Wall Street article. I'll post this in the comment section below this video. Now they're clamoring for this NERP absurdity in the US. How will this end? This is a transcript from my podcast last Sunday by Wall Street. Now, there is talk everywhere that the United States, too, will descend into negative interest rates, and there are people in the Wall Street and in the media that are hyping this absurd condition where government bonds and perhaps even corporate bonds and eventually even junk bonds have negative yields. All of that NERP absurdity is already the case in Europe and Japan. By the way, Japan has been in like stagflation for like since the late 80s, right? Since their huge bubble burst in the 80s. There is now about 17 trillion with a T in negative yielding debt in the world, government and corporate debt combined. This started out as a short-term emergency experiment, and now this short-term emergency experiment has become the new normal. And now more short-term emergency experiments need to be added to it because the first batches weren't big enough and haven't worked, or have stopped working, or more realistically have screwed things up so badly that nothing works anymore. So how will this end? The ECB rumor mill over the past 2 weeks hyped the possibility of a shock and awe stimulus package. By the way, the ECB is Europe's central bank. On top of the shock and awe stimulus packages, the ECB has already implemented namely negative interest rates, liquidity facilities, and QE. The entire German government bond market, even 30-year bonds, have negative yields, and the German economy shrank in the last quarter. That gives Germany 2 out of the last 4 quarters where its economy shrank despite negative interest rates from the ECB, despite the negative yields on its government bonds, and despite the negative yields among many corporate bonds. In other words, the German economy, the 4th largest in the world, is hitting the skids despite or because of negative yields. And now the ECB wants to flex its muscle to get yields to become even more negative. And there are folks who want to prescribe the same kind of killer application to help out the U.S. economy, which is growing just fine, right? According to Trump and everyone. Also, guys, lately in the news, like, all they're saying is everything's fine, everything's fine. We're just taking precautionary measures because of the global economy, not the U.S. Anyways, let's get back to it. Since the ECB's shock and awe package started to appear in the rumor mill at the beginning of August, the European Bank Stock Index, it includes banks in all EU countries, not just those that use the euro. Well, since that shock and awe rumor appeared, the stock index for the banks has dropped 11%. Negative interest rates are terrible for banks. They destroy the business model for banks. They make future banks collapse more likely because banks cannot build capital to absorb losses. But banks are a crucial factor in the modern economy. It's like an electric utility. You can somehow survive without electricity, but a modern economy cannot thrive without electricity. Same thing for the role commercial banking plays. So that 11% drop of the bank stock index wasn't from some bubble high, but from a hellishly low level. The index is now down 78% from the peak in 2007, and it's back where it had first been in the 1990s. So that was, let's see, nearly 3 decades ago. European banks are sick, and with negative yields, they're getting the exact opposite of what they need. No wonder the bank stocks reacted skittishly to the threat of more deeply negative interest rates. In Japan, same thing. Japan used QE to bring down interest rates long before the term QE was even used. And Japan has near zero or below zero interest rates for 20 years. But the bank index has fallen 8% since August 1st, when the renewed stimulus rumors started and closed on Friday at a new multi-year low. And the index is down 73% from where it had been in 2006. I didn't even want to look at the bank index going back to Japan's bubble years in the 1980s because that would have been... but I did look. The Topix Banks Index peaked at 1,500 in 1989. And now it's at 129. Let that sink in for a moment. It has plunged by 91% over those 30 years. So 0% interest rates and worse, negative interest rates are terrible for banks for the long term. And because they're bad for banks, by extension, they're also bad for the real economy that relies on banks to provide the financial infrastructure so that the economy can function. Commercial banks need to take deposits and extend loans. That's their primary function. This credit intermediation is, as it's called, is like a financial utility. One bank can be allowed to fail, but the banking system overall cannot be allowed to fail. That would be like the lights going out. So there needs to be a special regulations, just like there are regulations on electric utilities. And banks need to make money with their primary business. The profit motive needs to make them aggressive on lending, and the fear of losses needs to make them prudent. Those two forces are supposed to balance each other out over time, with banks swinging too far in one direction, then too far in the other direction as part of the normal business cycle. And this generally works with some hiccups as long as banks can do this profitably, meaning they make enough money and set aside enough capital during good times to be able to eat the losses during bad times without collapsing. In this basic activity, banks make money via the difference between the interest rates they charge on loans to their customers and their cost of funding those loans. This cost of funding is mostly a function of interest rates that the banks pay outside All right, basically, guys, the gist of it all. Negative interest rates destroy the entire banking sector. They destroy corporate bonds, and inevitably they'll destroy the economy. So the temporary drug, right, is negative rates, so banks lend out money, but in the long term, it destroys everything, because if there's no interest being pulled in from debt, from loans being put out into the economy, then nothing's going to work. It's that simple. So what I'm trying to say is, with this article, is this is insane. And it's really insane. What could end up happening is the central banks destroy all the other banks, and then somehow, banking becomes nationalized, or is owned by one central bank, or these central banks become the only banks in town, because because they could bail themselves out by printing money. There is this secret thing that I want to talk about. I'll leave that for another video. How banks and central banks could actually keep the printing presses running for governments. But I'll leave that for another video. And nobody really knows about that or talks about that. They definitely don't talk about it in universities. So nobody knows how this will end, because this has never been done before. And that's the scary part. That's the scariest thing about it. And I don't know. It's insanity. We live in an insane world, and your average person has no idea what the hell is going on. They think everything's fine. That's what else. That's what else is. It's funny. And then your politicians, they just keep promising free crap, knowingly or unknowingly, knowing what's coming. I know Elizabeth Warren knows what's coming, because she's using it she's going to use that to try to defeat Trump as the economy goes into a recession probably next year. All right. So let's talk about prices for a second. I'm going to make a separate video on charting. I don't want to make this video too long. So, the S&P down, all that. It looks like it's rallying here. It has been. They put in a little bit of a bottom here for the short term on the daily and the weekly. So I expect them to possibly go higher. The Jackson Hole conference will be Friday, and we'll see how dovish Powell could be. That's why there's no point of doing TA right now, because all eyes will be on the Fed this Friday for the Jackson Hole conference. Gold and silver, silver is above $17 again. Gold is holding above $1,500. That's extremely bullish. If there's a dip, I say buy every dip you can. And there you go. Also, I'm going to do another 10% off on my services here, and I'm gonna put out some more updates. I put out a ton of new updates or new research for new mining stocks. I also want to take a look at platinum for some speculation, and I'm gonna roll out some more micro cap and royalty mining stock data for you guys that you guys can look at. So, I'm going to do another 10% off my services, because I just want to keep buying and buying before this bull market really takes off in precious metals. So I'll post that in the comment section below as well, below this video, the link for 10% off. Go to my website. All right, guys. Dollar, it's holding up above 98 handle. 10-year, it's still at 1.58. The yield curve, it's inverted. And I'm actually hoping for a pullback in metals, but let's take a look real quick. I just want to go to the daily here. I mean, if it holds up above 1500 and Jerome Powell is extremely dovish Friday, gold could just rally again and it could hit 1600 by the end of this month. Alright guys, until next time.